Hey everybody, hey traders, Chris over here. It is 4:30 p.m. on Wednesday, the 21st of August. We had a pretty choppy day in the markets overall, but some good short-term opportunities to one, be a seller of options, collect some premium, offer up a nice little VWAP support level right here around noon today in ES. So for S&P E-mini futures, the SPY itself pretty choppy. Let me switch the workspace here. So we've had 2 days of indecision, which isn't a huge surprise. This is a backloaded week with news. Today we had a couple of major points. If you were looking at the economic calendar, one that may have popped up, I didn't see this on Forex Factory, but I saw this elsewhere. The U.S. non-farm payroll annual revision came in with a negative 818,000 jobs, meaning that there was a revision of over 800,000 jobs to the downside. Now, that is one data point of many, but this does also play into the narrative of the U.S. economy slowing, jobs slowing, more unemployment, people looking for work, which again, it's a for the overall cycle of jobs in the business cycle. It takes time for something like this to grip the market and all of a sudden be bearish. But we are potentially looking to cut rates with the Fed heading into a softer growth period for the rest of the year. But obviously the market can ignore a lot of things. We continue to see some good days overall. Everything was green today. S&P's up 0.34%, Q's up 0.47, Dow up 0.11, IWM with an outpace of all of them, 1.3% on the IWM, coming right back into these nice support zones. I hope the IWM can stay there. And in fact, for me, I'm looking for the IWM. If it's going to continue to go higher, that melt up continues to look pretty good as well. And it's still pretty choppy on the IWM. But what a comeback it would be, in addition to the S&P being so close to the all-time highs, the NASDAQ and the Dow all sniffing those all-time highs from mid-July. So we will see what the Russell can do if it can continue to catch up, if rate cuts continue to be the story into September. If we look at the CME watch tool, I have noticed that this number, the probability of a 25 basis points cut, is coming down, and the number for the 50 basis points cut is slightly coming higher. Now, doesn't mean that this changes. Usually this instrument is right up to that actual 18th print, and I personally think that there's still going to be a 25 basis points cut, and the market's not going to be surprised by the Fed. But you never know, because what we will see until then, we will see another round of inflation data, employment data. We'll have non-farm payroll, core PCE, and we will have, I believe, unemployment claims for the next several weeks. And we get into September with some seasonality. So we're going to see what the market's going to do. Checking out my levels here, S&P again, long wick to the south, trying to push up again. Green on the day, just shy of the all-time highs at 565. I posted this week, we're just within that 1% shot. I believe that the market's more likely to test that high than it would be to actually fail and go back to the low. So if we hit the high and it's a fake out trade, then we're going to have some indecision and volatility to deal with here. But we're so close to those all-time highs. I think the path of least resistance during summer trading, as we wrap up August, get into September, is likely that path of least resistance to the upside for right now. The Qs, same type of thing. Efficiency-wise, we still have a gap on the QQQ right around this 4. Let me check this number here. Should be in the 480s. So this 488 to 493 zone, if price gets up into there, we're getting closer and closer to the all-time highs. If we hit this level of supply, will the market turn over on the right-hand side of the trend a little bit? Is it offering a dip to play between these levels? We can keep an eye on it. If this is going to be some type of high to low, is it possible that we come up here and find the supply zone, fall back down a little bit for correction, come back up to the all-time highs, and then put in a bit more of a bear trap topping pattern, and then maybe head lower later in the year or into Q1 of Q2 next year? I don't know. What I continue to do, and I'm talking to a lot of traders about this, is I just want to put positions on where if the market goes up or down or a little bit sideways, I can still make money. So a lot of strategies are helping me in that regard on SPX, NDX, and watching trades that are doing exactly that. If we go to the Russell, I do have a trade this week on the RUT, where if we go to actually right now, everything's looking pretty good for profit. If we stay above 2100, that's good. If we stay above 2050, that's good. Those are profits for the next couple of weeks. Interestingly enough, we did see the VIX with a green candle yesterday and a slightly higher level today, although we did have some indecision and a long wick to the north. But the volatility is up a little bit and not just sitting right back here at these $12 lows. Oil, interesting story on oil. We just made some fresh lows, or revisited fresh lows from early August. And let me see what we have here on oil news. Target surges. I did see that this morning. I took a nice little earnings trade on Target. That's cool. What's the impact? Okay, crude ton energy. So global demand. That's really what's driving oil lower. Global demand is not a good sign, and nor is it a good sign for the global economy. But I still like oil as far as support goes. I think there's legitimate support down here between 67 and 65. I'd like to see if we pick up there, get back to the middle of this range. So I do have some bullish positions that I'm watching on oil at those lows. I did get lucky, not lucky, but fortunate last week that we had a nice little turn in the short term. I took some profits on CL last week, right off that turning point. Gold, I think gold continues to be this nice little asset bull market that nobody's really talking about. And I like it. I think that this is a healthy looking trend. Every time we have a nice impulsive move, we're pausing. Nice impulsive move, we're pausing. And so if we're getting to all-time highs up here and we're pausing, I think there's some time for gold to continue to accumulate and then look to head higher. It makes sense with central bank rates getting cut. It makes sense with global concerns. It makes sense with inflation. There's a lot of reasons for the gold narrative to push further into the bullish territory. And target wise, I'd love to see gold above 3,000 if possible. So I continue to stay bullish on gold, GLD, gold futures. I'm long on all those, as well as silver. I'm long on SI. I'm long on SLV. It actually happens to be one of my better positions right now. If I show this right here, let's go into symbol SLV. There we go. So right now trading about $33,000 in profit on SLV, and that's looking pretty good. What else do we have here? Foreign markets, kind of mixed. I mean, I'm watching China pretty closely, actually. If we go to the Hang Seng HSI, we're right on the verge of this trend line break, so I'm watching to see if we get a push into some higher highs at 17.8. This would be around 17,800. And positions I'm looking for, China stocks that I really like. We do have earnings on Baidu tomorrow morning that I'll be watching to see, how that affects with HSI, FXI, BABA, as well as BIDU. Those are the stocks that I like in China, so I'm watching those. Mag 7 hanging in there today. Interesting story on the 2-year and the 10-year. The 2-year dropping a little bit, the 10-year dropping less than that. But we're seeing that the inverted yield curve is slowly decreasing once again. Right around that August 5th bottom, we had a slight normalization of the yield curve where it was no longer inverted, and that lasted for pretty much the day. And then they quickly inverted, and we had a bit of a bull steepening. So the 2-year, the 10-year have both dropped again, and we're sitting here about 13 basis points apart. So it's still inverted on the 2 and the 10. But you notice here in the short term, the 3-month is coming down pretty nicely from 5.6 nearly all the way down to 5.15. The 2-year has dropped quite a bit from highs around 5.25 all the way down to 3.6 at the low point. Here's 3.93, so a nice little chunk to the downside on the 2-year. The 10-year, I don't necessarily trade yields or looking at them like, oh, I'm going to trade this technically. Look, if the yields are going lower, that means that bonds are going up. And so if I look at yields versus bonds, I'm still long on TLT. That's primarily my bond exposure. I have an $82 call on TLT trying to get out at 100 or higher. So I'll keep an eye on that one for a nice little gain. And then I've got some futures trades. The dollar index was another interesting setup today. So personally, I don't know if the dollar is going to go much lower than 101. I'm a little miffed at the dollar for having this type of run to the downside, making it seem like it's so easy just to trade the dollar index, when in fact the currency pairs related to it have not been this smooth to trade. The Aussie dollar is still in a wedge. Okay, I think the Aussie dollar is still in a wedge where it's trading like this. The euro dollar has made a breakout. The euro dollar was in a wedge, made a breakout, retested, and did go. So the dollar index this way has been the closest correlation to the euro dollar going higher. The pound dollar has resistance and support. The pound dollar has been making higher highs, and still heading up higher. But I wonder if that resistance level around 3,100, 3,150 is going to act as resistance on the pound dollar. So it's not quite the same as just a full-on, drop on the DXY and a rip on the pound dollar. The New Zealand dollar, we have a lot of sideways movement, and we have a trend line. I'm just drawing this from memory, so I can show you these in a second. But we have equal lows on the New Zealand dollar, but I'm not really convinced that we're breaking higher until we get above a certain price point. Dollar CAD is looking a little bit better. I like the dollar CAD to the downside. But like I said, if this thing bounced, and I talked about this for traders or anybody that's watching here, I would like to see in the short term, if I look at a trade, let's go to a smaller time frame here. If the 15-minute time frame offers up a little bit of bounce on the DXY, It doesn't have to be, crazy complicated here, but if we just take a trend line from roughly that level there, I would not jump in and just say that's the bottom. I don't like that trade. But if we come back up into this area here, test this level, and then retest the backside of the trend line, we could have a turning point with a nice little swing trade. If I like this trade, stop loss below, see if the dollar wants to come back and find 102 or pull back in this pocket around 102.50. This area would make some sense for some structure and some efficiency. So in the near term, I almost think that a dollar rally would make more sense to me in the near term. But like I said, if I don't have confirmation to trade this trendline break and this just continues to head lower, okay, I mean, then follow the dollar. 100 on this DXY is another big price level that we've seen some support resistance at. So I would be watching that. All right, so that's short term on the dollar index, but we are down quite a bit. And on the higher time frame here, I think the DXY is testing or about to. Here's the daily time frame. RSI oversold. So technically, technical indicator wise, if you look back on this to like 2022, we have not seen a lot of overbought, oversold conditions on the dollar. But when we do, we tend to see some decent, highs and lows forming. So, even this low here on the daily time frame was a bottom, but it wasn't the RSI oversold. This low here was not oversold, but here we are watching at the dollar index like this could print oversold. Now, again, short-term time frame, watching price action. What I'd like to see would be if we go up and make a lower low, and this gives us a higher low, I might look for some versions between the RSI and the momentum oscillator to then look at that dollar heading back up into a range trade. So if it confirms, I'm probably leaning more bullish on the dollar in the near term, but I'm not trying to call the bottom nor catch the bottom. All right, if this heads lower, so be it. We could head down to 100, and that would be a nice critical spot there around that's July 2023. But we could bounce off of a big round number at 100 and see what this dollar is going to be made of. So still watching the dollar, but like I said, unfortunately, the other currency pairs were not quite as easy to trade. Right, the dollar index. Remember, the dollar index has been dropping since the summer. The Aussie went up, down, and up. Not the same. Okay. The euro dollar looks a little bit different. Euro dollar has gone up and up and up, and it has made higher highs and higher lows. This is the breakout that I thought was the easiest trade because look, lower highs, higher lows. This is stuck. And we broke, retest, and we went. That was probably the cleanest trade on the euro dollar right in there if you're following along trading that little breakout. Otherwise, it was a sneaky little breakout on the dollar. Pound dollar right here. Okay, remember, dollar index went down. This one went up and down and up and down and up again. Not behaving the same way. It is making higher highs. I see that, but there is resistance here that could be future resistance as well. And I'm not ready to trade it. If somehow this thing breaks and pauses and holds, then maybe there's more to the upside and I can get involved with some type of swing scalping on the pound dollar. Otherwise, if this thing forms a top, comes back down to the lows, takes out this level, I'm looking to short this pound dollar back into a range. This would be resistance. This would be support. So still not a trade that I'm really confirming yet, but I'll be watching to see what type of price action I get. New Zealand dollar, this one's also been sideways. There's still a trend line that hasn't broken yet. We have equal lows around 58.50. So I think there's open space in this one. I've talked about this before, but open space here if the dollar's weaker and the New Zealand dollar benefits from it. Otherwise, it's more range trading to maybe equal lows here around 58.50, or ideally for me would be a retest of 56 and I'd get long at 56 and look to stay long all the way back here towards 65 or 66. So for me, two areas I'd like to trade. If it's open space, I'll trade dollar weakness on the Kiwi up to there. If it comes back and retests, there might be a chance to get in short term where we can sell high, target this equal low, eliminate risk and see if that's target 1 or perhaps down here to target 2. And if we hit this level, I'm longer term bullish towards the big range. And then dollar CAD. Okay, dollar CAD has turned nicely, but dollar CAD was also pushing up as the dollar index was pushing down. So dollar index down, or dollar CAD up, and then we've retreated all the way back down. I like this setup. I do have a pending order on the dollar CAD. We did take out some recent lows, which I like. I'm looking to see if we go high, low, maybe a fumble in here, but pulling back to the backside of the trend line, looking to see if I can get an entry and then sell off towards this structure or possibly this low. So if we go to 34 or we go to 32, those would be my two targets on the dollar CAD to the downside on the right side of that trend line. Dollar Swiss, personally, I'm still long in the dollar Swiss, and I'm waiting to see if this level here around 83.80 will hold. If we just start breaking the trend line, well, I'll just keep hanging on to it. But if you're looking at short dollar, this one is obviously trending with lower highs and lower lows for right now. And then dollar yen, dollar yen is heading lower, but this is mostly because of the dollar, not necessarily the yen. If you look at the currency strength chart today, we have yen weakness that came back into the midpoint. We have pound strength. We have Swiss strength. We have the yen all over the place with volatility. Look at the dollar. The dollar was stable, a little bit strong on the day, gave it all back, finished around the midpoint. We had a lot of choppiness outside of maybe the pound showing some strength today. That's about it. But yen crosses, I'm still looking to see. I think this is a pretty simple Gartley pattern. All that means is we have a high to low. If we go up, down, and then up one more time, we find some efficiency in this like midsection pullback zone, and then we look to see if this wants to, be a top and then sell back down to retest the lows. It's a little bit cleaner on other currency pairs. Let's go Aussie yen for a moment. So this one I kind of like if we have a bit of a pullback, so high to low, push up here. If we pull back and then push up one more time, I'm looking for that same thing right there for a Gartley pattern. If this just goes high to low and this keeps melting up, melting up, melting up, melting up, I would still look for some type of 50% to 618% pullback zone and then look to see if this rolls over for a bit of a correction. There could be some good short-term trading opportunities on the yen crosses with that type of higher time frame structure and then aligning on a smaller time frame. Okay, one individual stock today to wrap things up. I did take some profit today on Target. We had an earnings play, and I can show you that right here. So if I go to TGT, I took the trade initially. Let me just go into, there it is. So I took the trade on Monday morning for a 796 debit, and I closed it out today for a 1290 credit. I played the trade like so. I had a long call and a long put, and then I had a sell call and a sell put. So I basically traded volatility. If you look at a risk analysis graph, it looks something like this. And price went to the upside. So price went up, and this is where my profit is reached on the call side. So my long call and my sell call added up to give me a total with some value left in the put side, but I had a total of almost $13, which was a nice little profit of over $5. So I will take it. And that was a nice little win on the day. And then the rest, I'm just watching some short-term gamma levels. Let's see if the Jackson Hole PMI combination tomorrow gets the market moving a little bit. Otherwise, it's been a pretty quiet couple of days outside of a Monday direction, Tuesday, Wednesday indecision. We're right here towards those all-time highs, but we're not there yet. So can the market get there? Possibly Thursday, Friday, the market's going to try to do it because it's path least resistance. But be leery. I did put an inner trend line here. If this level breaks, if we break and stay there, then we might be heading towards this outer trend line and coming back to find some gaps. So I'm not calling the bearishness yet. I think the market wants to try to test the highs, but once we test those highs, I could see some profit taking, I could see some efficiencies, I could see some pullbacks happening, especially heading into September, which over 75 years of data does show that it is a bearish month. Here's some interesting stats here. Mag 7 doubled the return of the S&P in the last year. Over the last quarter, thus far, the broader market has outperformed the Mag 7. And then here, September is the S&P's worst month of the year by a lot. Not even close, actually. But if we can get through September and survive September, typically October, November, December is historically bullish to finish out a good year. All right, so I'll let you go with that. Thanks for being here. Thanks for checking it out. And if you have any questions, comments, let me know. Talk to you soon. Thanks. Bye.